Imagine a world in which profits are all but guaranteed and, the concept of loss is banished from existence. But hold on. Is that really feasible? Is it possible to make money without risk? This video will break down the clever systems that have driven Tesla to the forefront of innovation and reveal a financial strategy that appears to be specifically designed to support the company's upward trajectory. Every element of the puzzle, from Elon Musk's bold vision to the cutting-edge technology transforming industries, points towards our ultimate objective: unleashing profits never before possible. In other words, this video is your golden ticket. If you've ever wanted to ride the wave of Tesla's success with an unbreakable guarantee of gains, or if you've ever wondered how to have your cake and eat it too in the world of finance, get ready to be astounded, educated, and motivated as we explore the world of Tesla profits and a risk-averse approach that has the potential to completely alter the investing landscape. First things first, though, in order to receive updates from Tesla stock news, be sure you hit the like and subscribe buttons. With that said, we can now begin the video. Imagine that you have a 10-year investment horizon in Tesla. What are the chances that you won't make money during that time? That's about as uncommon as seeing a unicorn, really. If you place a wager on Tesla not experiencing significant growth over the next 10 years, it's like expecting to discover a mermaid in your bathtub. It won't happen unless a cosmic accident completely changes the financial scene. Address the issue that is a major concern. Is it accurate to suggest that there's absolutely no danger of losing money? It's not unthinkable that a world-changing conflict targeting Tesla facilities could occur, even though the chances are about as slim as pigs flying. However, I would require a crystal ball to foresee that outcome. You are aware that one should never say never. When it comes to probability and maths, those numbers are everything to us. It's like declaring with absolute certainty that tomorrow won't bring rain when there's a chance you could actually need that umbrella. Therefore, even if we have a lot of optimism, we are not quite ready to give it a 100 guarantee. But wait, there's more. Tom, our pal, makes a valid point. He feels fairly certain that the price of Tesla's shares won't drop below what it is now. You're actually taking a fairly conservative stance. Even your conservative model is difficult, realistic, and extremely conservative in the middle. On the other hand, you're making a concerted effort to reduce your optimism in the optimistic model. And that's why I like this a lot. This kind of gives me the impression that this is kind of the floor, and that's still, you're quite bullish when you say something like, this is a certainty that these things will happen. The reason you're able to say that, in my opinion, is that even when you consider all the possible undesirable outcomes, it still performs really well. Now, although we're not totally in agreement with certainty, Tom's cautious optimism makes sense. Herbert, meanwhile, seemed to believe that Tom's conservative represents the modern meaning of moderation. He resembles Gandalf more than anything else in the stock market, firmly positioned to avoid unjustified hostility by taking the middle route. Imagine Tesla dealing with a robot takeover or experiencing a flat tire on the self-driving highway. Even in the unlikely event that everything goes horribly wrong, the likelihood of it going completely insane seems low. You are discussing a business that, even in the presence of a few drops of rain, is able to climb above the storm clouds. Not to be forgotten are the doubters. Some people passed up possibilities like free ice cream when Tesla stock dropped in the past. In retrospect, though, it's 2020. And those who wavered might have lost out on the opportunity of a lifetime. Therefore, the true issue isn't so much whether or not Tesla stock will decline further, but rather where that decline will originate. Is the price of a share going to rise sharply from $1,000 or just slightly from $500? The bottom line is that we're all in. Who knows when lightning will strike twice when it comes to making the most of my hard-earned money. We're all ears if we see an opportunity that shouts possible tenfold gains in the following 10 years. Moreover, there is a less than weak chance that my pocketbook will cry. Yes, you may wonder when the next golden ticket will appear. To be honest, we're not even able to solve the enigma. It might happen tomorrow, or it might take decades. So if we're not on the Tesla roller coaster, though, I'd probably be hanging around with these 500 bunch in the interim, looking for a nice 10-yearly pat on the back. It resembles a steady state marathon in which your wallet ambles along, growing by half every 10 years. Not quite the fireworks we were hoping for, but still nice. Let's now cast a quick glance behind ourselves. Do you recall the last chapter in the TIFF 500 story? Yes, there was a brief period during which those who held on for dear life for 10 years ended up with somewhat less than they had anticipated. Not hip, huh? So why risk clipping your wings and dancing with the devil? My fave stock is Tesla. Why? Because it functions as your greatest investing dreams, already an angel, not to mention our distinct tastes and shades of financial wisdom for other people. A size that fits like a glove, maybe too big or small. It's acceptable if you're not interested in experiencing the excitement of Tesla. In this galaxy of investments, your circumstances, objectives, and risk tolerance serve as the North Star. It's like the cool kids arriving at the party a little late, but Tesla is still rocking a 42 institutional ownership. Just a fun little fact. And what do you know? It hasn't even reached its zenith yet. So get ready for when those institutional investors show off their true affection for Tesla. We're talking about some fireworks in the stock price. Consider Apple, which is currently hovering around $160. That gives institutional investors a good amount of leeway to purchase additional Tesla stock. The problem is that in terms of pricing, Tesla doesn't exactly fit the pattern. Looking at the valuation figures is similar to comparing apples and oranges. Apple's T-Hass ratio is around 240, while the price to sales is 45. In contrast, Tesla is valued at a completely different level. The worst part is that many find it difficult to identify Tesla as an R venture, mostly since they are a vehicle company. As an automotive company and an R player, wrapping their minds around Tesla is like to attempting to stroke your tummy and pat your head at the same time. Audit presents a challenge. Let's now discuss why a firm focused on augmented reality seems to have more valuation enthusiasm than Tesla. Institutional investors have historically expressed skepticism about Tesla. They favor businesses with strong succession plans and share buyback programs. However, Tesla doesn't quite follow those guidelines. Furthermore, what do you know? On this, Elon, I agree. When there are better uses for valuable capital than buybacks, why squander it? Not to be overlooked is the crucial man risk. Yes. Fraz, it would be akin to placing all of your eggs in one Elon Musk basket. However, that's a risk that many of us Tesla enthusiasts are willing to take. Let's now engage in a lengthy game. It will be like unwrapping the treasure trove of possibilities when Tesla begins to realize the benefits of its moonshots, such as autopilot and fully autonomous driving. Even the most cynical institutional investors won't be able to resist hopping on the Tesla bandwagon when those juicy profits start rolling in. And what do you know, saying that fully autonomous vehicles won't be profitable by then will sound as archaic as a floppy disk. Do you recall Jim Cramer advising against running Tesla stock? That headline really caught my attention, but as it happens, Tesla produces automobiles that function like, well, vehicles. When people finally get that Tesla is a legitimate electric vehicle manufacturer and not simply marketing bluster, it's like a eureka moment. Tesla has been more like a roller coaster with magnificent climbs interspersed with heart-stopping dives. Recall their statements that a larger Model 3 will eat its brothers or that Tesla shouldn't attempt mass-market automobiles. Yes, as expected. The public embraced it, and Tesla's share surged alongside the company's electric cars. And what do you know? Nothing will be different the next time. History has shown us that Tesla's revelations frequently cause the doubters to retract their statement. We're all in for the journey as it's like an exciting movie plot that keeps us guessing. In conclusion, keep in mind that every person's experience with investing is different. Your path is determined by your circumstances, risk tolerance, and aspirations. Here's to risk-taking and prosperous financial prospects, regardless of whether you share our ardent love for Tesla or just starting off. That's it for now, people. We've explored the Tesla cosmos in great detail and uncovered some fascinating revelations. Now, I'm interested to know how you feel about all this hype over Tesla. Do you have reservations about joining the Tesla bandwagon, or are you eager to do so? Perhaps you're already in control and seeing those electric visions come to pass. Let's continue the discussion in the comments section below. Please share your thoughts on Tesla's development, its prospects, and any queries that came up in our conversation. Giving this video a thumbs up would be great if you thought it was as insightful as we did. And hey, check out Tesla stock news if you haven't already subscribed for more. But I appreciate your time, and we'll see you in our upcoming films.